CNBC TV 18 exclusive, Marc Faber, now joins us. Marc, good morning. Always good to have your thoughts. So are you happy that at least now we are moving away from money printing? Or do you think this is just one of those random rate hikes and, in 2017, maybe Fed will develop cold feet again? Your first thoughts.
Well, first of all, we need to understand that central banks, they talk to each other. So whereas the Fed is not expanding its asset base at the present time, the Bank of Japan and the ECB are still buying assets to the tune of approximately $150 billion a month. And some of that money that is kind of, as you would say, printed in Europe and in Japan, then flows outside Japan and Europe. It causes the euro weakness, it causes the Japanese yen weakness, but it strengthens the US dollar and it strengthens US assets. And so basically, the central bank in the US, the Federal Reserve, they can have other central banks print money for them for a while. And when then in 2017, possibly the dollar becomes too strong and the US economy rather weakens than strengthens, then they can print again themselves. They have an excuse. So basically, I still maintain that central banks will keep on feeding the world with excess liquidity.
Okay. Morning, Marc. Always good to hear you. Thank you very much for joining us. So is the central thesis that a lot of money is going to continue to slosh around and therefore we won't see too much of falls even in emerging markets, currently the backwaters?
Well, I mean, we have to be very careful when we talk about markets because, in general, people will tell you that emerging markets performed poorly in 2016 and that the US was the only game in town. But let me just say that in US dollars, in 2016, the Russian index was up 51%, Brazil 63%, Kazakhstan 66%, Thailand 19%, Indonesia 19%, Karachi 40%, Vietnam 30%, and so forth. So some markets have actually performed very well. Then we turn to individual stocks. Some stocks have done very well in 2016. In particular, the sectors that were very depressed, like oil and gas and mining companies, that is until recently they weakened, but on the year, they're still up strongly. A year ago, American Barrick was at less than $6. It's still now at 15 after having been at $24. So we have had big moves in individual sectors and in individual stocks.
Well, that's true. Marc, so what is your big call for 2017? Which market or asset class do you think could be the top performer in 2017?
Well, as I kind of indicated, in general, investors are too bullish about the US and far too negative about emerging economies. I also think that they are neglecting Japan and European equities. So anything outside the US is probably, from my perspective, more attractive. Then we talk about valuations. Valuations in the US are at historically very high levels, whereas elsewhere they're relatively inexpensive valuations. So I would essentially focus on foreign markets, and I would focus on sectors that were out of favor for a long time. The favorite in America among hedge funds are basically financial stocks and technology stocks, and I would rather look at basic industries, that mining companies, maybe at coal, oil and gas, and these sectors I think are quite attractive.
Okay. More to go for the US dollar, you think, at all?
I beg your pardon?
More to go, more strength for the US dollar, you think, or is it already way too strong?
I think it is too strong, but currencies, like markets, they tend to overshoot in an environment where you have this much liquidity. So fundamentally, the US dollar is probably overvalued at this level already. But it may overshoot further, which may then cause a problem for the Federal Reserve, because as they said, they plan basically to have 3 interest rate increases in 2017. But if the dollar is too strong, maybe they can't do it.
Okay. I remember when I came over in May, Mark, you said we are at the cusp of a massive commodity bull market. We've seen a lot of that play out. How much more in 2017?
Well, I think, again, it's very commodity specific. Some commodities have performed very well, zinc, aluminum, and others they haven't. I mean, when you look at all commodities, then gold hasn't performed particularly well. It's the strongest currency in the world in the sense that it's still up 9% this year against the US dollar. But it hasn't gone up like 50%. And other commodities have had big moves, especially also agricultural commodities. And my sense is that agricultural commodities still have a lot of upside potential.
Okay, what about India? What's your view on the Indian markets? Because we've seen a fair degree of underperformance compared to developed markets this year. What are your thoughts for 2017?
Well, I mean, I'm against the intervention that occurred in terms of demonetization in India on principles. But I think in general, the Indian economy, when you compare it to the rest of the world, let's be pessimistic and say India will grow at 3% per annum, and let's be optimistic and say it will grow at 7-8% per annum. In either case, the performance is much better than what we will have in the Western world. If we can grow in the US at 2% per annum for the next 5-10 years, that's about the maximum I would expect. And in Europe, maybe we have no growth or very, very modest growth. So overall, I think that in India, corporate profits still have the potential to expand.
Mark, what was the in-principle disapproval of the demonetization?
Well, first of all, I'm a believer that if you look at the global economy and the economy of individual countries, the one economy that actually functions reasonably well is the underground economy, where you have very few rules and where there are no regulations. That actually functions very well. And it's a dynamic economy. And that is precisely the economy that I would not try to destroy. Number two, the cash that is being used for corruption is relatively modest. The big corruption doesn't occur with cash. It occurs with contracts where government officials then get all kinds of commissions on the side and so forth. That is the big corruption. The corruption with cash is a relatively modest and irrelevant corruption. And I would combat or fight this corruption with other means than abolish banknotes.
That's a fair point. Well, Mark, to speak again of the big asset classes of 2017, you told us that agricultural commodities is something you'd be positive on. Oil and gas stocks is what you would be. Mining companies, perhaps. What would you avoid in 2017? Other than, of course, I guess, US equities.
You see, numerous people have compared the victory of Donald Trump to Ronald Reagan, who became US president in 1980 and started his job in 81. And they say, well, there will be a Trump bull market like the Reagan bull market in the 80s. First of all, when Reagan got elected, the market rallied into November 28th, 1980. But afterwards, it went into bear market for 2 years until August 82. And then afterwards, I admit, it had a huge bull run until 87. The Dow Jones from 800 to 2,700. But the point is that in November 1980, when Reagan got elected, there was a huge change in leadership away from oil and gas, which at that time made up for 28% of the S&P 500, to other stocks, to disinflation beneficiaries. And I think regardless of how you look at the world, whether you're positive about Trump or negative, or positive about the US dollar or negative, regardless of that, I think that we are reaching a point which is also supported by the recent market action, where we have a huge change in leadership away from the FANG stocks, Facebook, Amazon, Netflix, Google, and of course, to more basic industries, to commodity-related companies.
Point taken, sir. Well, smokestack stocks yet again. Thank you very much, Marc Faber, for joining us with your thoughts this morning.